It's a great pleasure to see the room full, and I'm looking forward to what I think are going to be two very interesting days on topics which are quite central to a well-functioning fund and asset management industry. On behalf of the EFAMA team, we're very proud to present, again, I think a first-class line of speaker and a very diverse program which hopefully will spark interest and will inspire all of you. Before starting, I think we want to thank you, our media partners and our sponsors for their support, and also the EFAMA team for organizing the event and making this possible. And before letting the day go through the schedule, I want to make a few remarks to probably set the scene from an industry perspective. And I want to start from what I think is a view on the macro context that we're in right now. Because we think we are in I personally think we are in a very different setting than in the last few years. Everyone is talking about the sustainability transition, but the reality is that the next few years we're going to face what I call the multiple transition. Is probably the first time since the end of the Second World War that we're seeing such a significant and structural change to the economy, because we're having four transitions happening at the same time. So the first one is sustainability, and again, there's been a lot of talk. There will be a lot of talks in the rest of the day. But just to remind few numbers, we need an additional $3.5 trillion to support the net zero transition. There will be 200 million jobs being created and 200 million jobs being eliminated. So the importance of the just transition is going to be critical. And the role of finance is going to be critical to support this transition. Where it's very important that we maintain a long-term view without being too much, without paying too much attention to the short-term noise on the debate on sustainability. There's, of course, a technological transition. And again, I'm not going to spend time. There's a lot of hype about AI, generative AI. Everyone understands why technology is important. But there's a third transition, which I'm a bit surprised it went a bit under the radar screen, which is the demographic transition. I'm just going to mention a few numbers also here. Global population will continue to rise to 11 billion from the current 8 by 2030. But this growth is actually masking a very polarized geographical outlook. We have emerging markets continuing to grow and developed markets which are actually already declining. Europe is in the same position, and if we look at the age cohort between 25 and 64, this part of the population has already been declining for a few years, which clearly will have an impact on fiscal deficit and fiscal policy of a number of member countries. And the other important element on the demographic transition is that millennials are aging. And millennials will have a very different attitude to saving, investment, consumption, which will clearly create a different macro scenario for us to interpret in order to be able to shape some of the challenges ahead of us, understanding that the consumer probably will behave differently. And then there's a fourth dimension, which is the geopolitical transition. I'm not going to comment on what's happening in different parts of the world, but I think if we take a longer-term view, the balance of the world in the past 20, 25 years was based on three major drivers. The first was access to cheap labor costs. That was mostly US. The second was access to cheap energy, which was mostly Europe. And then the third was access to cheap international trade, which was mostly Asia and particularly China. Now, if you think about what has happened over the last few years, you'll immediately realize that those three building blocks for the globalization, the way we have experienced, are no longer in place. I mean, the old balance is over. What is going to be the new balance or the new balance of power? It's unknown, but clearly it's another element of disruption that we need to take into account. So it's a very unique moment, I think. I honestly have no memory of 4 disruptions happening of that size happening simultaneously. Some of them are reinforcing, some of them are contradicting. They are strictly intertwined, and you cannot just look at one transition without thinking about all the other ones. Now, why this is relevant, and again, the outcome is going to be uncertain, but I can comfortably probably share with you my thoughts that there are probably three important long-term consequences of this macro scenario. The first one is that there's going to be a lot of volatility. At moment of disruption, it's quite normal to see volatility, and I think volatility structurally will probably increase, which has an implication on the liquidity management of a number of instruments and products that we're discussing. The second implication is that structurally, this will produce lower GDP growth in the world. Demographics will clearly have an impact on the long-term potential of the different economies, especially in the developed countries. And thirdly, inflation will be structurally higher. So in a way, we have gone in 5 years from lower for longer to zero forever to higher for longer, and that probably will stay with us for a little while. And why this is important for the whole economy and I would say the society at large, if we use this frame to look at our industry, this is going to be even more important because the reality, and I think I'm sure that many of my colleagues are going through the same reflection. The past 20 years have seen the industry growing very nicely, but one leg of growth in terms of assets has been the performance of the assets that we manage, so linked to equity markets mostly and fixed income as well. My view is that this leg of growth will be significantly lower going forward, so AUM growth will be lower. The competition will intensify to capture flows. And at the same time, revenue will be under pressure because of margin pressures, the shift to passive. We'll have plenty of time to discuss. And in a way, we'll have cost inflation, which is something we have only started to get used over the last couple of years. So if you put this into a longer-term outlook, you see that it's probably one of the most interesting and challenging time for our industry as well. At the same time, I mean, it's also important that we remind ourselves what is the role, the broader role that as an industry we play in society. And I think we are one of the most important transmission mechanism of capital allocation. We help investors to achieve their long-term goals. And by doing so, we basically provide a long-term, stable source of funding for government, for companies, and for projects. And what is the positive angle in a scenario which is a bit more gloomier, maybe, is the positive angle is that if we look at European household assets, only 1/3 of those assets are what I would call professionally managed. So the long-term driver of attracting capital, investors, or transforming savers into investors is what's going to drive the industry going forward and is absolutely needed also to fund the ambitious project that Europe as a whole has, namely sustainability agenda and digital transition. So given this context, I think it will be pretty obvious that it will be crucial for Europe to make significant progress towards the capital markets union that works for the people and works for the financial industry as well, to support the digital and the sustainable transition. And I really would like to congratulate the commissions for the determination and efforts to move forward and for achieving good progress, even in an environment which has not been easy, because probably some of the support that was expected from a number of EU capitals didn't come through. And a good list of achievements that have been done, clearly the completion of the UCITS and the AFMD review. On one side, in a way, the fact that the delegation framework remains largely unchanged is clearly good news for all of us. I think on the positive side, the introduction of a wide range of liquidity management tool, I think is very much welcome, especially at a moment in which volatility most likely will be higher, so managing liquidity will be critical. Second big achievement is LTIF 2.0, which is clearly which has the potential to unlock retail money, retail investor to invest in real assets, which again is going to be another element of supporting the important policy objective on sustainability and digital. with the right, I would say, balance of investor protection rules. We're eagerly waiting for ESMA to define all the details when it comes to minimum holding periods and liquidity, to make sure that the whole picture on LTIF will be a positive one. But definitely is a significant positive achievement. Then, of course, the MiFID review with new momentum around the creation of a consolidated tape for ETF and equities. So good progress has been made, but there's still quite a lot of work to be done. And I think with as we approach the next European election next summer, there's a few files which remains absolutely critically important. No one, I think, will be surprised if I start by mentioning the retail investment strategy. There's going to be a panel later discussing about it. But let me just say that in EFAMA, we agree with the Commission's on the objective of the retail investment strategy. We absolutely need to attract more EU savers into capital markets. We need to increase retail participation in the interest of the investors themselves, but also, of course, in the interest of finding additional avenue to support the different transitions. We are only afraid that as it stands right now, the draft of the retail investment strategy might miss its mark. Because as it stands, the focus is quite significantly on the cost side, and in our view, doesn't necessarily address all the reasons why US savers are not increasing their participation. Don't take me wrong, cost is a very, very important element of the equation, and we don't want to escape from that conversation. But there are equally important elements to put into the mix to increase the retail participation to capital markets. I will just mention a few. There's not a lot about incentives, and the importance of incentives in driving behavior from savers is absolutely critical. And incentives might even be tax incentives, which we understand is a very complex topic because it goes into the domestic policy of each member state. The second unfinished work is the ESG rating. I think the ESG rating proposal is welcomed by the industry because it gives enough transparency and improve the quality of the overall ESG information. One only point which I think is important to note is that the only element of the value chain which is unregulated remain basically the data provision in general. And I think this is probably an area where we would need to re-engage again. Good progress has been made also on the CSDD, on EMIR and Euro clearing, although there are a few elements that needs to be addressed. But again, the overall message that I want to pass is that good work has been done, but we need to accelerate on some of the files which are absolutely critical going forward. And I hope that this conference will give an opportunity for everyone to address some of these topics in a constructive and forward-looking dialogue with policymakers, regulators, and industry participants on what the priority should be for the next EU cycle and what do we need to do more collectively to accelerate the transition to basically a more integrated capital markets. At EFAMA, and I think we're defining our main agenda for the Commission in a way, what we would like to see. We basically think that there should be for the new Commission 4 priorities. The first, again, is just continuing what has been done in the past, so boosting retail investors' participation and promote retirement investment. The second priority should be the improvement of the sustainable finance framework to really unlock its full potential. And the SFDR review is actually probably a good opportunity to move in that direction. Third priority would be to advance a more efficient, stable, and competitive capital markets in Europe. And then lastly, make competitiveness a central element of all EU policy, not only for asset management, but I would say more broadly speaking. And I think over the next couple of days, today and tomorrow, there will be a number of keynote speakers, and we'll have plenty of opportunities to explore, debate, agree, disagree on whether these are the right priorities. Let me get to the conclusion. And On one side, I just want to pass a few messages. The first is that the asset management industry is a key component in the capital allocation, and I think it's quite crucial that we work collectively and constructively with policymaker and regulator to understand how we can really, on one side, do the right things for our clients and our end investors, but support the policy objectives that the commissions and the new parliament will have. I think the second message is that the asset management industry is overall in a good shape. I think we have continued to grow. I think the level of the quality of the staff employed by our industry and the professionalism in managing our clients' savings has increased significantly over the last 20 years. So I think the starting point is really very good. But I think it's absolutely critical, in my view, that on one side, the European industry becomes more competitive even on a global scale. So we don't have to, our business by nature is global, and we need to have global champions which are European in nature to make sure that this will give us economies of scale and will favor some of the policy objectives. If I can just leave with a few recommendations that could be debated in the next few panels. From a regulatory perspective, we would like to see predictability and stability of the regulatory framework. We're not against regulation. Actually, regulation is absolutely crucial. And we welcome the dialogue and constructive that we had over the last few years. But the stability and the predictability is absolutely key. The second element that we would like to see is the coherence between the different pieces of regulation. I'll just make one small example. When we look at risk, which clearly goes more in the direction of favoring passive instruments, how do we reconcile that with the claim that we need to support the green transition? So this is an element of coherence that I think needs to be taken into account in the upcoming weeks and months. And then the third and my last recommendation is, and this is mostly for regulators and policymakers, it's absolutely crucial that the asset management industry will continue to thrive to support the objective, the policy objective. Again, I'm going back to our broader role that we have as a transmission mechanism for capital allocation, and we need to have a strong asset management industry to make it possible.